हेलो।
आप लोगों को लिंक आया रहेगा।
वैशाली क्लास स्टार्ट हो रहा है तो आप लॉग इन कर सकते हो। हाँ, आप लॉग इन कर दो।
तुझे एक्सेल चाहिए कुछ?
हाँ एक्सेल चाहिए मेरे को, जीमेल भी एक बार ओपन करना है।
On my laptop,
उसको मेल आ गया है।
on my laptop, Excel won't open directly by double clicking.
अच्छा।
So every time you keep this Excel open, Control O, new Excel. You will know that Control O.
हाँ वो तो बताइए, यहाँ से ओपन करना पड़ेगा।
Browse.
डाउनलोड्स में जाना पड़ेगा।
Browse whatever path you have, go there. Let's say I have my Excel in my downloads. All Excel file and then double click.
अच्छा।
Okay, if you do direct double click, it won't open for some reason. I don't know why.
ठीक।
Now for email, use this. Don't use Firefox, else the session will get disturbed.
ठीक है। अरे
इसमें मैं सोचा सुबह लैपटॉप लाओ, लेकिन हो ही नहीं पा रहा।
आपके पास बुक है ना?
हाँ, चाहिए आपको?
नहीं मेरे पास बुक
ना, हैंडराइटिंग थोड़ा अपन
आपको ऐसा कभी लगेगा तो मेरे को दे देना, मैं लिख
लिख तो लूंगा लेकिन हैंडराइटिंग बस।
क्योंकि मेरे साथ आजकल बहुत होने लगता है, फिर याद नहीं आता है तो बुक खोल के देखना ही पड़ता है।
नॉर्मल ही है। प्लस 20 सेकंड।
My screen is shared, no?
Yes.
Okay. I can't see Vaishali online.
उसको लिंक मिल गया था।
Okay, Smith is on the way.
Two people are there. Okay, hi. Vaishali, can you hear us?
Yes.
Okay, great.
Okay, so volume is fine.
Fine. I'll just extend this.
Just a moment, Manish. Yes, I think you can start definition why fundamental analysis required for as an
Sure.
investor.
So, if we have to analyze any company or any stock or any sector, so there are two methods to do that. One is technical, the other is fundamental. So the basic difference in technical and fundamental analysis is that in technicals, you only look at charts. We will come to technicals later in our course, but in technicals, you don't look at any other data points. Charts and the price is your only indicator, and based on that, you will make your trading or investment decision, right? Anything else apart from technical, it falls into fundamental. Like, for example, if I say tomorrow price of crude is going to fall, okay, so obviously you will try and see what will be the benefit of that to these companies. Which companies will benefit from this and which companies will be hurted from this particular move. This type of analysis is a fundamental analysis, right? If I say GDP of India is expected to grow at just 2% compared to 3% which was estimated earlier. So again, this is a data point. Now this data point is linked to your fundamental analysis. So anything apart from charts, it is linked to fundamentals. Any news that is coming in the market, that will impact the fundamentals. If I say tomorrow, Mukesh Ambani is going to retire from Reliance, that's a fundamental call. That will impact the stock price accordingly.
News based.
Anything news based or event based or fundamental. Fundamental means company. Have you ever analyzed the company? If I want to see how a company is performing, for example, Reliance is doing day-to-day business. How is Reliance doing as a business? How will we come to know? When we look at their balance sheet, when we look at the income statement of the company, the cash flow the company is generating, on that basis, you will come to know how company is performing, right? So this was the basic definition of fundamental analysis. Should I do it as well? So fundamental analysis is a kind of a detailed study of a business, right? This study involves, historical data analysis of company for certain periods, for certain years. It doesn't change day to day. Like you will not do day to day analysis of Reliance or any particular company, right? Every quarterly they publish their results. You will compare those results with the historical results with other companies in the same business, and then you will arrive at some conclusion how is Reliance performing. So that is kind of a data analysis that you do, and this data comes from company itself, right? So for example, right now right now we are in the month of February, right? So company has already declared their December results. Now next results will be declared for March, which will come in the month of April. So you see that every quarterly they are coming up with their results. So if you are doing analysis, so you have to rely on the quarterly data or on the yearly data. Year ends in March, so that's why you rely on the March data, which is the yearly data. So doing a day-to-day analysis in fundamentals doesn't make sense. Hence, whatever view you make in fundamental, you make this view for very long term. I can't say on the basis of fundamentals that what will be the price of Reliance tomorrow. What will be the price of Reliance day after tomorrow? That technicals will help us, but not fundamental analysis. So whenever you are doing a fundamental analysis, you keep your horizon very long, which is more than a year. 1 year, 2 year, 3 years, 5 years, right? So for very short term, if I want to do an analysis of a company for say 2 days or 3 days, fundamentals will not work in that case. This is the basic difference of fundamental and technical analysis. Wherein technical analysis you can use for very short period and as long as very long period, which is like a year or kind of thing. Short period would be as low as 1 day, 1 hour, and long would be 1 year, 2 year accordingly. But in fundamentals, your view is only long term. Perfect. Now, in fundamentals, as I mentioned, everything apart from your charts will come into fundamentals. So your qualitative data, your quantitative data related to companies will all come into fundamental analysis. Now, qualitative data like, who is the promoter of the company? For example, if I say, like, we can see the difference in the promoter of a Yes Bank and a Reliance. Yes Bank and Bajaj Auto. So obviously, when people invest, when they invest huge money in companies, it matters a lot. They want to see how the management is, how the integrity of the management is. Are they trying to manipulate their stock? How they are running the company? How decision making skills they have, or what kind of decisions they are making, whether they are making very good decisions or not. For example, some year down the line, there was a case of a Satyam. Satyam was core into IT business. Now, if Satyam is investing into a property business, you will question, right? Question to management that why are you doing such kind of business? Your core is IT. Why are you not investing in IT? All of a sudden, an IT business and a property business is a completely different. You will ask management, right? So this is what fundamental analysis and qualitative analysis is. Again, the kind of corporate governance that the company has, shareholding structure. For example, if I look at the shareholding structure of a company where promoter has very less stake, say 5% or 10%, and another company where promoter has at least 50 or 60% stake. So generally we will believe that company where promoter has very high stake, promoter will not try to take risk on those companies, because if anything wrong happens in that company, promoter stake will be gone, even he will be in big losses. Company will not make, promoter will not make such decisions. So in qualitative factors you also look at shareholding structure. We will come to that later. While doing analysis of any company, we will come to that. Again, the other factors which will be impacted would be your political condition. For example, just an example I am saying, some business houses will have very good connections with certain politicians. If that politician has majority in that area, or that politician has some influential power for the business, obviously that particular business will get more benefits compared to other. Perfect. If I am running a business, I have a very good rapport with Narendra Modi, say, then obviously I know that people will feel that at least he will do something for my company. Just an example I am telling, not exactly the way. So we also do pest analysis for this. Pest is political, P for political, E for economic, S for social, and T for technological. So in qualitative factors, this all things will come. I will do the complete analysis of a macro analysis of my business to understand how my business is going to perform. Just to give you an example, if suppose I am a company and today I decide to launch a pager. Are you guys aware of what pager is? Okay. So before mobile was invented, there was a device called as pager. So it was roughly about like 2 by 2 or 3 by 3 inch pager, wherein you can just type a message. For example, if you want to say hi, call me urgently. So that was a pager.
No call
We can't call each other. You can just drop an mail or drop a small SMS through pager, right? So if suppose in today's world, if I decide to launch a pager, so how is that as an idea?
Why did it come in the first place?
Exact. So we know that technology is so advanced right now. If I give you such kind of business idea, no one would invest in that. So technology is in each and every business, starting from oils to finance to your industrials. The way earlier these people were taking oil from the oil wells was very different. Now technology has been very advanced. That's why they are able to find out oil in various areas where right now oil, like earlier they were not able to discover. So technology has helped these companies. We know banking and finance companies. Earlier, when there was no online platform, we used to do branch banking. For each and every transaction, we had to go to branch and we had to do, write a filler form and do that kind of activity. But right now, tell me how many times do you visit the branch? But we are doing these banking transactions daily. Technology has changed a lot. Automobile manufacturing. Earlier, how automobiles were manufactured. Now, kind of manufacturing that we are seeing, that everything is computerized. Technology has changed,
Rapidly.
right? Even social factors, like for example, we also look at the demographics of a country. For example, if I see today, India has majority of population which is in the range of say 15 to 35. Means we have young population. So a country where population is very young, the demand of certain products will be very high compared to other kind of products. Example, whatever, say fashion industry, technology industry as well, food and kind of items, which will be different. The consumption habit of a young people compared to old people will be different. So these social factors will also impact. Nowadays, young people, they would want car, they would want bike, they want super bikes, they want super cars. But a guy who is a 60 or 70 a year old, he would be happy with Maruti. Example,
Yeah, I'm getting.
right? So such social factors will also impact your business. Economic factors will also impact. For example, if I say the consumption in India will fall down, means people will not go and spend their savings. So if consumption is going down, obviously sales of companies will come down. If sales is coming down, obviously margins will get impacted, business will get impacted. So everything which is related to economy, each and everything. For example, if finance ministry, they are coming up with budget, and in budget they announce something to a particular sector that will impact your business. If today finance ministry says, okay, we will levy no taxes on electric vehicles, zero taxes and zero GST, it will be a big boost to the automobile sector and companies who are into electric vehicle production.
Prices will go down and then the interest
Prices will go down, demand will come up. So definitely companies who are manufacturing these products, obviously they will see more demand. Suppose companies say that we will not allow exports of automobiles to any countries. There is a decision in the finance ministry. Now we know that most of the automobile manufacturers, they export their cars to other countries. If all of a sudden finance ministry says that no, exports are not allowed now, obviously the kind of fall in demand will be there. The automobile companies will be huge. The kind of investments, the factories that they have put, they will be into losses because they have made investment thinking of certain demand in their mind. If demand is just 50% of that, so obviously their factory will lie idle, workers will be idle. Such economic factors will impact political factors as well. We have to see which political entity has good business sense, which are making good business decisions. For example, last year in September or in October, the finance minister, they reduced corporate tax. It was done so that companies flourish here, they get more benefit, they invest in India, so that if they invest in India, there will be more employment. If there is more employment, there is more revenue generation in hands of people, and they will go and spend. When they spend, companies will earn, government will earn through taxes, right? If I am buying anything, I am paying GST on that. That revenue is going to government. So that kind of political decisions will also matter, right? The other factors which impact economic factors we discuss right now, whatever is the case. Next is the finance and the quantitative factors of the company. How well see, everything is good, but I as a business owner, or if I am running business, I am not managing it well, then it is my problem. Like if tomorrow Reliance, like Mukesh Ambani decides that okay, he his factory will work only twice a week. Instead of working full 7 days, they will work only 2 days, and 5 days they will give holiday to the employees. So this is the business decision of Mukesh Ambani and nothing to do with the external factors. So obviously, that impact will come into my balance sheet. My sales, my production will be less. My sales will be less. My sales is less. Definitely, this will impact my revenues, my balance sheet, my cash flow. So first we will do analysis of these financial or quantitative methods which we apply in fundamental analysis to understand the performance of a company, right? So basically, whenever you do, example, you run a house. Every month, before the month starts, you will budget something that XYZ will be your expenses for this month. So that much amount you will keep as a reserve. After that, you will first buy all the basic necessities. First expenses will be that. You will allocate your expenses to that. Then whatever is your savings, accordingly you will keep on changing your priorities. Whether you want to go for shopping or movie, or whether you want to go for restaurants. But before doing that, obviously, ghar ka ration or whatever food and grocery you want for that month, first you will fulfill that. Once that condition is all fulfilled, then you will spend on something which is on leisure, right? The same thing is with business. Just imagine now, we will take an example of a, say, scooter manufacturer, right? We will understand how he starts his business and how the full statements are made. The income statement, the balance sheet, and the cash flow statement. So we will now manufacture scooters. Say, for example, we are Bajaj Auto. Okay. And we will try to understand how things are going around. Fine. Just a second. I have all this thing made earlier. Okay. So suppose you are a Bajaj Auto guy. We are Bajaj Auto. Now we decided that we will start a business of manufacturing a scooter. That business idea came in your mind. Now you sat and you were thinking that what to do. The first thing that you will need is money or capital to start a business. Perfect. So you decided that okay, some 10 lakhs rupees is needed to start this business. Okay. So have you heard of a term called balance sheet? So balance sheet is a financial statement wherein what all assets you have and what all liabilities you have, we will record that, right? And this balance sheet will tally because your assets and your liabilities has to match. So now you decided that you want 10 lakh rupees to start this business. So you are a promoter. Now you have put 10 lakh rupees into business, into Bajaj Auto to start the business. So that is the capital that you are putting in. Equity capital, that's your own money, right? Now you are putting this money into a company. You are creating a company. So you and company are different entities. For example, Reliance and Mukesh Ambani are different entities. They both are not same. Whatever money Mukesh Ambani is putting into Reliance, he is putting his personal money into business. So business is getting something, business is getting money, and he is putting his equity into that. So same thing we are doing here. I decide. So basically, that's the liability for a business because business got this money from somewhere. Business has generated this money. No, you have put this money into business, right? So this capital has come from equity holders. If I am starting this business and I am putting my money, I am equity holder of that company. So let's say share capital. I need 10 lakhs. Perfect. The other way to do this is you can go to bank also. You can tell bank that okay, business plan. I want to do a business of manufacturing scooters. Give me loan for that. And bank, if they find your business interesting, they will ask you, okay, you put certain money and rest amount we will give you as loan. There are two ways to fund business. Either you take your own capital or you borrow this money from some bank or some institution. So let's make another case here. Income statement. Okay. So let's make another case here. Again, understand this is a balance sheet of say Hero Honda, but we can again, this is case one, and this is case two. Case two. This is again for say Bajaj Auto only. Obviously, when you are doing business, you will try and see which is beneficial to you. Whether I should put my capital or whether I should take loan and do the business. Obviously, whatever capital you save, you will invest that capital somewhere. The other case, for example, bank says you put 20% and 80% we will give you. So he puts his capital of
2 lakhs.
2 lakhs. And bank says bank loan.
That also comes under liability only. Anything that you have to pay is basically liability.
Exactly. So this is my liability, right? Whenever I wind up my business, I need to pay my bank loan. I need to pay my creditors, all whatever debt I have, I need to clear, and after that, whatever is left, I need to pay to my equity holders. So bank says, okay, so this way we will start our business. Now money has come into your business. Now what next thing you will do? You need to set up a factory to manufacture. For that, you will have to buy a factory or buy a land, or you will have to rent a factory for somewhere. So there are again two methods to this. I buy land plus factory. This I am buying it. Say I buy this for 5 lakhs. Okay. Oh, sorry. One thing. I missed. So on the liability side, you got 10 lakhs. Your assets need to match. What business got? Cash. Right? So in this case, he put 10 lakh into business. So business got this cash. Your total liabilities is 10 lakhs and your total assets is 10 lakhs. Same thing here. You put 2 lakh, bank gave you 8 lakhs. So total cash that you got is 10 lakhs. Perfect. Now you decide that you will buy land plus factory. Say worth 5 lakhs. Obviously, from your cash, you have bought this land and factory. So your cash will decrease, right? So cash will become 5 lakhs. Still your balance sheet will tally, right? In this case also he does the same thing. So here cash has reduced. Now you have a factory, everything is done. Now next thing what you need is you need to buy raw materials from market, right? You will buy those products, you will process those products. Like you will buy aluminum, you will buy steel, you will buy rubbers, you will buy electric wires, you will buy headlamps and everything. You will convert that into a scooter. You will make that raw material into finished goods. So I am terming that as inventory. Okay. So see, this is one time. Land and factory is one time investment. You will not invest that, every time. So this will come in your fixed assets. I need so this is your fixed asset. Fixed assets are assets which you create for long term. Like if you are creating this factory, you will run this factory for at least 20-25 years. You will have that much vision in your mind, right? You won't change your factory every day, right? Same thing is here. Now this raw material, suppose you bought this raw material worth 2 lakhs, you converted that into a finished product, right? So obviously to buy this raw material, to process it, everything, you need money. That money will be deducted from your cash. Say now you have bought this for say 2 lakhs. Now your money left is 3 lakhs. Still your balance sheet will tally, right? Same case here. Perfect. Now your product is ready. Now you will go into market and you will sell the bike or sell the scooters.
For how much?
See, again, we'll come to that. For example, with this much capital or with this much cash, you were able to say produce 1,000 units, right? Now you know what amount you have invested in the business. You will have certain expectations. For example, if same amount if you had put it in bank deposit, easily they would have given you 7-8% without doing anything. You are taking that much risk that you are taking loan, or either you are putting your money, you are buying land, factory, everything, and you're doing business. Definitely your expectations will be very high from the business. Plus you have to pay taxes and everything. So what you would expect that at least you should get 15 to 20% returns. Plus you will also look at market conditions as well, right? If Bajaj Auto and Hero Honda, they almost have similar bikes. If someone is selling at 50,000, the other company can't sell his bike at 80,000, right? People would not prefer unless you have something else. If both the companies have almost similar bikes, will you pay someone very high amount? So this market pricing, this will completely depend on what is your cost. A, obviously you will not sell at loss. You will also look at market conditions. if it's a very bullish market, we know that as a country we are doing well. People are spending the money. So obviously, I know that I can demand more, but economy is in downturn. People are not spending. Obviously, I will try to say, okay, whatever less margin I am getting, I am ready to sell. Right? So, for example, so now I will come to my income statement, because now what I am doing, I am going in the market and selling this product. So on top, it will be sales. Sales. Now, what is sales? Your price into volume, number of units I sell, multiply by the average price. That is sales. This is very important data for us, because as an analyst, as a fundamental analyst, I need to see how the company is performing. Every year or every quarter, this company release their statements, how many bikes or how many scooters they have sold in particular month or in particular quarter. So as a fundamental analyst, this data is very important for me. Every month it comes. So for example, in this case, suppose they have sold 1000 units at what price? Oh, sorry, for example, we can take a realistic example. 100 units at say 2000 rupees. Example. Huh?
Yeah.
So your sales would be 100 into 2000. This is your sales.
Just one off the topic question.
Yeah.
Every month we hear number of sales units that are sold by each company
Right.
across various models.
Yes.
We get breakup of models also. We don't have any registration data, right, to verify the.
Exactly. Now that you have asked this question, so the question is, every month we get the sales data of these automobile companies. So the data that comes every month is the production data. For example, if I produce 1 lakh quantity and that quantity has come into market from my factory, it has come into market. So every month we get that data. That is not the registration data.
Like not sold data.
Not the
Say
sold
in the
data.
market inventories or stores, but they're not sold.
Exactly. So every month the data that you are getting is number of units that have come from factory into market. If you need registration data, that data government has, which these companies do not produce.
Right.
But at least we know that no company would want to pile up their inventory.
But again, like you said, in the news it comes that YOY this much percent increase.
Yes.
So again, that is on production.
Exactly. That is the number of units that have come into market from the factory.
Okay.
If you need actual sales data, you need registration data, which I guess is not available as of now, or even if it is available, it is not disclosed every month to us.
We can rely on the production.
See, obviously, if I am not doing well, my sales are not there, I would not, block my capital in inventory, right? I would want very minimum inventory, because to manage that inventory, I need to put some capital. I'll need to have a go down so that I can keep my inventory in that go down. More inventory, the bigger go down I will need. If products are perishable, like food items and all, if I am storing that, and there will be refrigeration cost, there will cost of inventory, cost of storing the inventory, I need electricity. So that's why, it is always better as a business that I keep my optimum inventory. Just to show that, I am doing well, I will not pile up my inventories, right? Because that amount of capital is involved. Perfect. So this is my sales. Now, whether these are cash sales or credit sales, that we will come to later. Perfect. Either it's a 100% cash, or it's a 100% credit, or it's a 50-50. If it's a cash, company will get directly cash from this, and they will, they can utilize this cash somewhere. But if it's a credit sales, so company will not get cash for this immediately, right? That we will come to later. Now, to do these sales, I need to make some expenses. For example, from my factory, your scooters will go to showroom, transportation cost, XYZ cost, whatever cost that we have. Manufacturing cost that we have, for example, factory rent, factory labor, electricity, everything you have used for, making this. So I will less COGS, which is cost of goods sold. Cost of goods sold. So this COGS means costs which are directly associated with manufacturing.
Okay.
So for example, I am setting up an office at Nariman Point at a very posh area. Now that cost is not directly related to my production. Na?
Why? You are in a given point, you're paying high rent or high amount of
I can
salary.
create this office in my factory itself.
Yes.
But just to show that, I am so well off, I have created my office at Nariman Point. So that cost is not directly related to manufacturing. Although that cost is a business cost, but not directly related to manufacturing.
Would that go in advertising?
Yeah, the other factors, office rent and other factors, but you can't associate that cost with manufacturing. But to make that scooter, you need 10 kg of aluminum. Without that, to your scooter can't be made. Your bike can't be made. Without tires, you need minimum amount of rubber. Say 1 kg of rubber is required to make those two tires. Now that cost, the cost of tires, is related to manufacturing. So can you understand now what is the difference? Now advertising, I keep big hoardings of scooters and everything. That is not directly linked. Na?
Yeah.
Though it's a business cost, but you can't associate that cost. That hoarding is for 5 lakh quantities, for 2 lakh quantities, for 1000 quantities of your scooters. But your 10 kg of aluminium, you can differentiate that this 10 kg of aluminium is for my one bike, for my two bikes. So that is the difference. So costs which are directly related to your manufacturing will come into COGS. So even the factory that you have, obviously in factory you will be manufacturing these goods. So that cost will go into that. So let's assume this COGS is 1 lakh. This is my cost. Huh? Should I keep minus figure?
For this much 100 units.
Whatever I have sold. Whatever quantity, 100 quantities I have sold. So this is my cost.
Do we like ever add COGS as a breakdown, like raw material
We
or
do.
employment?
Yes, we do. They do. they'll give you whatever are the basic cost cogs like their factory, their electricity. Normally, companies give that. If it's a big number, then they will give you.
They disclose even this. Just asking to
Yeah,
be
yeah.
very specific. Suppose unit of electricity consumed and cost per unit.
See,
And that breakdown also.
see that breakdown. Normally, they will not give you in their annual report, but the analyst, the financial analyst who are working, like people, suppose I am an analyst in Goldman Sachs, I am an analyst in Morgan Stanley. What I do normally, I'll go and visit their factory, right? I visit their factory, I'll see their factory, how things are going. When they do modeling to find out what is the true value of a company, at that point they'll give each and every detail. What is the power consumption? What is the cost of the power? How many manpower they have? How many watchmen they have? Because you are trying to see the real value of a business, right? For example, if you want to invest say 200 crores in business of Bajaj Auto or Hero Honda, this all cost will matter you. If you are buying one share, two share, it is still fine. But someone who is buying worth 200 crores, even a 1 rupee savings will be very important for him because he is investing such a big amount. So he will not directly buy from market, right? He will first try and understand. He will understand the business, how business is being run. After that only he'll invest. So that kind of data is available.
Unit wise also it comes different.
Yes, yes, yes. Per unit cost, obviously, when you are selling bike, you have sales per unit, you will have cost per unit. So that cost per unit will have everything. Your factory cost, your power cost, your employment cost, your advertising cost, and your marketing cost. Each and every, even your taxes, right? So now you have sold certain unit and you have deducted these cogs. These cogs will be your factory cost, your electricity cost for factory, not for your office. Your manpower used for factory. Obviously, you need people to assemble your products. So all these costs will come in this cost of goods sold. After that, what is left is called as gross profit. Gross profit. This will be 2 lakh minus 1 lakh is my 1 lakh rupees is my gross profit. So this is my business profit. If someone is doing this business, now in this thing, the cost that we have deducted is only the business costs which are associated with your business only, pure business. If Hero Honda is for advertising, they are like taking Salman Khan as brand ambassador, and Bajaj Auto is not taking anyone. A tier two or tier a kind of a person, and he is doing the advertising. So advertising cost of Hero Honda will be very high as compared to Bajaj Auto. So that cost obviously is a business cost, but we have to understand what your business is earning in real. So this is what my business is earning, gross profit. Obviously, after this, I have certain other expenses like selling, administrative expenses, general expenses, marketing expenses, my factory car rent, not factory, for example, if office I have, factory rent is used in my cogs, my depreciation and amortization of fixed assets. Are you aware of this term? No. For example, this fixed asset, this factory, I have created this asset for very long term. So I will take the benefit of this factory for say 10 years. What is the cost of the factory?
5 lakhs.
5 lakhs. Now this 5 lakhs, I will take benefit of this factory for 10 years. So every year, what is the cost of the factory? 5 lakhs divided by 10. So that is called as depreciation of the asset.
Why only 10?
I can take it. Say
Example.
example, just to keep it very simple, I have taken. I can take 25 years old also.
There must be some rule ke how many.
There is that. Yeah. Yeah.
So there are going to be like machines in the factory and
Everything. Yeah.
I cannot say that 5 lakh is only going to be my only investment in land and tractor.
Perfect.
There is going to be maintenance,
Exactly.
a lot of other things also to run those machines properly.
Exactly.
So then how are you going to? There is going to be more depreciation year by year because after 10 years I cannot expect machines to work.
Perfect. Perfect. So every year it depends. Now, so I will find out what is the useful life of this particular asset or say machinery as well. Every year machinery will have wear and tear. You need those repair. So those repairs will keep on adding to your cost. So every year you will have say right now the value of this land and factory is say 5 lakhs. Depreciating value is say 50,000 because I see 10 years as my life of this particular factory. So 50,000 is my depreciating value. Now every year to maintain the health of my factory, I need to invest 10,000 so that my factory is in running condition. So that 10,000 will be added to my cost.
That also is again broken. Every year. So
That is every year. So that cost will come in your income statement.
Okay.
Got it? So obviously when you are running a business, you have invested this 5 lakh somewhere in your fixed assets. You need to account for this as well, right? So that's why I'll put depreciation here.
So depreciation here is here and
Yeah.
like the maintenance charges that you told 10,000 per year. 10,000 per year are cut from my income, which means are they my expenses?
They are your expenses.
Okay. Okay, because they cannot be considered as investment.
It is not investment. Now this is your expense. No? See, investment is something which you do for very long term. Right? For example, suppose you have bought a bike. Right? Bike is an investment. But to keep your bike in running conditions, you will have to every day, make sure that everything is proper. If something is broken, you will ensure it is like fixed properly. So that is your running cost. That is your day-to-day expense of making that keeping that investment into good condition. So that is your expense. So it's okay. See, as an analyst, you just need to understand how things are going on. Because again, a depreciation is such a big subject that it will require at least 3 or 4 full day lectures. Because there are various methods of depreciation. Straight line method means simple. What is the life of the asset? Say 10 years. So 5 lakhs divided by 10, 50,000 is my every year ka depreciation. The next method is written down method. Again, when the asset is new, it will not have much wear and tear. So it will not require much maintenance. But as and when the asset will get older, wear and tear will be higher. For example, car, bike. If it's a new car, new bike, maintenance will be lower. Your engine would be performing good. But if it's a 3 year, 4 year old bike or a car, there will be frequent maintenance.
Yes.
So that's a written down value of a fixed asset. So initially your depreciation would be lower, but later, once like after 50% of the average life is done, you will start charging higher depreciation. So that altogether is a different concept. Like we can't go into that much detail as of now, but yeah, depreciation is there. So just to I want to make you understand that we are taking into account each and every cost. If I have invested something here, 5 lakh rupees, if I have invested here, so obviously I need to get profit after investments, right? What is my net investment? I need to find out that. If I want to run this business for longer period, I need to then put more money into my land and factory, into my fixed assets. Otherwise, if I don't invest more than 5 lakhs, after 10 years, my business will go to zero because the life of the asset is just 5 lakhs. So example, if I have a view that I will run this business for only 10 years, so I need to earn this 5 lakhs also from my business. So if I want to earn 5 lakh in 10 years, that means every year I need to earn 50,000 from this. So that 50,000 comes in your depreciation. So that you will charge as expense in your business for that particular year. Right? So I will do less my depreciation.
Amortization.
Welcome to that.
Yeah, okay. No, I'm just asking. That was one more term that you used.
Yes, amortization.
It is same or different?
It is same. It is one and the same. Only difference here is depreciation is charged to tangible asset
Okay.
and amortization is charged to intangible assets. For example, Bajaj Auto is a brand,
Yes.
Reliance is a brand,
Yes.
so they have that brand value,
Okay.
so they have that trademark.
Mhm.
Can I start a company with the same logo, Reliance? Can I start a company with Bajaj Auto with the same logo? Why?
Well, it's already someone.
Because it is brand of someone. Now, to use that logo or to use that brand, I need to take permission from the owner that I need to use this. If promoter says, okay, you can use this, but then you will have to give me certain profit from you. That will be the benefit. If obviously if I get associated with Reliance or I get associated with Bajaj Auto, it's a big deal for me. Why will they associate with me? Only for profits. So even that logo has certain value. When we file for patents, the pharmaceutical companies they file for patents. The patents are valid for certain years, 10 years, 15 years, 20 years. After that, those patents become general. For example, suppose right now we are seeing this coronavirus thing happening. I, as a company, I develop certain formula which cures this disease. Now this is my finding, right?
Yes.
I should get the benefit of this. I don't want that other competitors copy this. So this patent will have certain value. That with this formula no other company can use for certain number of years, say 20 years. After 20 years, this particular patent will have no value. Then it will become a general product. Then even you can manufacture this medicine with the same formula without doing any research. You will just copy whatever formula I have given in my medicine list. You will just copy that and you will manufacture the drug. But because I have right now spent so much in R&D, so much manpower, I should get some benefit out of that, right? So whatever cost I have incurred, say I have incurred say 10 crores cost in that. Now this 10 crore cost I need to recover from my market. What is the life of the life of the patent? Say 20 years. So within those 20 years, I need to recover 10 crores. So that's why I will charge amortization. Patent.
Anybody who asks to use your patent will be.
Then it depends on company to company whether I want to sell this patent to you or not. If I am selling this patent to you, you will have to give me royalty. But now you understood what is amortization. So amortization is associated with intangible assets and depreciation is associated with tangible assets. Perfect. So let's say here we are running this business for say 10 years. So my debt, yeah, yeah.
One out of way question. So that patent now you have given that formula that is kept as a secret, no? Because anybody can do minor alterations to that
See,
composition
for
and
example, whenever the company file for patent, obviously certain amount is kept secret, but FDA, they have certain norms and regulations that you have to disclose raw materials what you have used and what is the percentage usage of those raw materials to some extent. Because there are some raw materials which a body can't consume more than certain percentage, whatever it would be. For example, say paracetamol has say 3 ingredients. Now they have given percentage of those ingredients. A human body can't take a certain ingredient more than certain percentage. So that they will disclose. But as long as this thing is patented, no one can copy it. No one can, obviously, they also know that someone will do a minor tweak and they will create a drug. But your patent rights protect you from that. Means it can't happen that you can just do a minor tweak and you can create a drug. You have to do something different. So that benefit these companies get. And whatever thing is very secret, then obviously they'll not disclose it completely. They will just, for example, if a company, if a FDA says this particular ingredient can't be more than 7%. So in my leaflet, I will, what I will print, X ingredient used less than 7%. Now, whether it is 1%, it is 2%, it is 3%, no one knows. But it is less than 7% as per FDA. But whenever you are taking the chemical compound of that particular medicine, you can derive what is the percentage used. Back testing, exactly. Reverse engineering they will do and they can come to know. But obviously you can't go and copy with a minor tweak because in that patent filing it is clearly mentioned that no other company can use this product for certain period number of years. Scientists also, whatever they research they do. Engineering companies also, automobile companies also, whatever kind of research they do, they patent the design.
Filal, JLR has most patents.
Would be, yeah.
Right now, this recent news item only. They are filed.
Goodwill that they have. So these all are intangibles which have certain life. So obviously this cost they need to incur from that business. So that will come in your depreciation and amortization. So in our case, I have taken this example of 5 lakhs and I assume the life of this asset is 10 years. So my every year depreciation is 50,000, right? Minus 50,000 less my selling, marketing, administrative, general expenses, all other expenses now club into this. All other expenses, marketing, advertising, office car rent, everything will come into this now.
Number of employees.
Employees ka salaries will come, it will come into this. You name it, and all other expenses will come in these 4 brackets, or here and there, but it will come in this particular thing. Okay. So suppose that cost is say 20,000. Now what is left for me is profit. Profit,
Profit after deduction all the.
yeah, profit after deducting all the expenses. This is profit before interest and tax.
So there are.
Yeah.
So that is your entire gross income.
Right.
After which you reduce COGS.
Right.
Which is your gross profit.
Yeah.
And all. So basically, only raw materials and whatever is gone into production accounts for gross profit.
Gross profit.
And everything else are the deductions.
Yeah.
Basically.
So my total sales, and I deducted my COGS. COGS includes only expenses which are related to manufacturing. Then I got my gross profit. I deducted my depreciation. I deducted my selling, marketing, advertising, general, any other expenses, whatever it are there. I deducted that. So I got profit before interest and tax. So what is my profit now? This was my gross profit. I deducted 50,000 as my depreciation and amortization, and I deducted other expenses. This is my profit before interest and tax. Now we had done 2 cases in this case. A, either you are taking entire capital from yourself, or B, wherein you are taking these 8 lakh rupees from bank. Right? Suppose bank charges 10% to me, less interest expense. They are charging 10% of 8 lakhs. So minus 80,000, right? So I am just increasing my sales amount here so that we can get some proper numbers. I am making this 1,000 quantity. 1,000 quantity, and let's make this 1,000 units. Fine. So that number makes sense to you. That's it. Nothing else. Now what is left to me is profit before tax. See, these are main line items which we are discussing. There are many small items which will come, but those are not that important. After your interest, you pay to your bank as well. Now there are no other expenses. This is your profit before tax. What is your profit before tax? Is equal to this minus this. 7,50,000 is my profit before tax. Perfect. Now, since you have profit, you need to pay tax. Say this company is paying tax at say 25%. So this company will do less taxes is equal to 25% of my profit. So this will be minus, right? This will be minus. This is my profit after tax.
So, in case
Yeah.
if this company is public and I have to return dividends or profit on shares and everything, where in that? In this
We'll come to that. So now this is your profit after tax. So this profit after tax is for your shareholders. So whatever dividends I am paying, I pay from this. See, dividends is not compulsion for any company to pay. They normally pay to reward shareholders for investing in this company. That's it. Dividend we do analysis of dividend to see what kind of returns company is giving to the shareholders. But when I'm doing the analysis of a company or a business, it is not that important because if I have this profit, I'll give dividends. But if I don't have profit, I will not give dividends. So to me, what matters the most is PAT. Now you understood this income statement. So this is a yearly income statement of Bajaj Auto.
Overall idea just of the general means common terms that are.
These are the common terms or the major line items in the income statement. This is how your income statement flows. Now, what kind of analysis we do, we will do it later. A ratio analysis and that we will do later. But first, everything is clear that how we started a business, what all line entries came in the balance sheet, and from balance sheet, what all line items came in the income statement, from sales, how we arrived at profit after tax. That things are clear, right? Remember, we discussed that we don't know whether this sales is a cash sales or a credit sales. If it's a cash sales, everything will come in your cash because company is generating cash from that sales. That sales, every day you are suppose selling certain product, every day you are getting this cash, every day this cash will be deposited in your bank. Your those sales will come here, your cash will get reflected daily. But suppose if you're doing sales on credit, say 1 month, 2 month, 3 month credit, so obviously your cash will not change, but you are selling something, right? How will you keep a record of that? So here we will do debtors. Means these are people whom you have sold the goods and they are yet to pay money to you.
Hmm. So then how will it come in assets? Because you're going to get the
You have
money.
to take money.
You have to take money from them, right? Perfect.
No, just one of the
Yeah.
companies that have debtors, example, tire companies will have or some.
Yes,
So
yes, they will have.
they don't disclose the name of the company.
No, they will not disclose the name of the debtors.
Bajaj owes them, you owes them this
No, they will not. If it's a big account, very big account, then they will, some companies do, but otherwise they, to normal retail people, they will not disclose. But if some big fund house is going and asking them, who are your debtors, kind of thing, to them they will disclose. See, uh, if company is investor friendly, then more people will come and invest in that company. No? If everything is very transparent, management is very transparent, then only people will come and invest in that company. As a promoter, I want people to come and invest in my company. If I get more money, I can run this business, right? Yeah, you were asking something?
Here I again have a question. If land and factory can come in fixed assets, can inventory also not come in fixed assets?
The inventory we create 10 days, 15 days ka inventory. Inventory is a short term in nature because from a raw material to creating a bike, it might take maximum 24 hours, 48 hours. Just imagine a company where inventory is, they are keeping inventory for say longer period, 6 months, and another company which is keeping inventory for just 10 days or 15 days. So which company will require more capital?
No.
The longer
Months,
period.
no.
If they are keeping their money in inventory, obviously your capital is blocked. Imagine that money you can invest it somewhere. So that's why inventory will come in your short term, because you will try to create a very optimum inventory levels. Just in time. Do you know that concept, just in time?
Whenever you need it.
Exactly. So it is available the point you need it. Otherwise, they will not keep an inventory of certain things. So your debtors will come here. Whatever amount it will come, your inventory will get reduced, or your cash will get reduced. Ultimately, your assets will tally. Again, we are not doing a CA course where we need to do this analysis kind of thing. I'm just telling you which all line items are very important over here. Right? Again, as a company, I'll buy these products, these raw materials either in cash, or I can buy these products in credit. So if I am buying it in cash, it will get reduced from my cash. But if I'm buying it on credit, it will go into my liabilities, current liabilities, which will come as payables. So payables are like, to whom I owe money. A business. Basically, this is for to run my business. So this is your overall balance sheet and your income statement.
So if the share capital, so you put the entire money by like 10 lakhs.
Yeah. Smith, Vaishali, is it clear? Any queries so far? Yeah, Vedi. What's your question?
So the payables can come in bank whenever I take bank loan or I put my entire money in it. Right. Payable can be,
These payables are your business payables.
yes, I mean whatever I buy based on credit.
Right.
Like I cannot pay in cash.
Right.
So there could be times where I've not put my entire money. It has gone via bank loan.
That's fine. No?
So
So in this case, your bank has given you 8 lakhs. That 8 lakhs came to you as a cash over here. 2 lakhs and 8 lakhs came to cash over here. Now bank is not interested how you are running your business.
okay.
Bank is only interested that bank will say, okay, every year this is our interest, this is the principal repayment that you need to do. Every year you need to submit your quarterly results and annual results to us so that we can check the performance of your business.
Okay.
Right? Assets, liabilities, income statement is clear so far. Now the third statement is cash flow. So basically you are getting this cash from some activities. Cash flow statement. So a business generate cash from its day-to-day operations, right? So this will be cash flow from operating activities. So whatever cash that you are getting or you are paying for your business purpose will come in operations, cash from operating activities. The other thing is you are making investment somewhere. You are buying property, you're buying plant and machinery. That's a big investment. And that investment you are doing for long term, that will come in cash flow from investing activities. So whatever assets you are creating for long term, that will come into investing activities.
If you're creating for a long term, let me comment. The cash flow for operating activities will be negative.
Not necessary, no? If you're see, what is the profit that you are getting over here? Positive, right? So your cash flow from operations. So whatever business you are running has to be positive, right? If it's negative, that means your business is not doing good. Just think.
What would exactly come into operational activities?
So your profit after tax will go over here. As of now, just assume that your profit after tax is cash flow from operating activities. Because this statement, this CA people take 5 years to understand. So it's very difficult to complete in a such a short session. Just understand that whatever cash that you generate from your operating activity, day-to-day operations will come here. Second, there is cash involved with investing activities. If you are buying a property, if you are buying machinery, you are buying plant, that asset you are creating for a long term. It is not required for your day-to-day business. Obviously, it's obviously you need plant to run your business, but you don't need that day-to-day, right? You don't need that investment on day-to-day basis, right? So that's what it will come from invest. It will come into investment activities. if you are selling that plant, if you're selling that particular fixed asset, so earlier you had recorded in investment activities, there was a purchase, so now you have sold that, so again it will be recorded in investment activities only. Perfect. The third line item is cash flow from financing activities. This is financing activities, means when you started the business, you put your 10 lakh in the particular business. That was you financed the business. Money came from your pocket into business. In second case, you put your own capital, you took bank loan. So money came from bank and money came from your own pocket. So that will come into your financing activities. Right? Jay, any query? Yeah, ask me.
Investing and financing is a little bit similar.
Oh.
Well, it is different, of course.
See, financing is from where you got finances. Investment is like where you have made investments.
But how will you, means from investing at least you are getting some return. In financing, you are always paying. There will be negative cash flow in financing activities.
No.
Always.
No. When you get capital, when you get finance from either equity or from bank loan, it will be a positive because business got the cash, right? Right? So it will be positive. When you are repaying that debt to bank, you will not repay full 8 lakhs in one go, right? Every year you will repay something. So every year, whatever repayment you are doing, that will get deducted. So it depends now on your investment activities and financing activities, how you are doing that. If every year you are taking loan, we take working capital loan,
For inventory maybe.
right? So working capital loan is like, it's a kind of, to run your operations, they provide you working capital loan. Banks provide you working capital loan. So whatever operations you need to run, you can take loan from that, from the bank. So it depends. And when we do addition of all these three, your net cash will change. Now you have taken,
There is more cash.
whatever cash is left, that cash will go into your balance sheet. That will come here. That will go in here. Here. So for example, in this case, we got cash from operations was 5,60,000 to 500. I'm keeping it very simple right now. Cash from investing activities is we bought this. Perfect. So this is deduction.
Negative.
We bought this. And whatever loan we took or whatever capital we took, this was before starting the business. While doing business, we have not taken anything. If I had taken any other loan during the time of business, I would record that. But as of now, before starting the business, I took those 10 lakhs and I took 2 lakhs and 8 lakhs. But right now I have not taken anything. So cash from financing is 0.
Okay.
During this year. If I take cash flow from financing activities from previous year, so it will be 10 lakhs. 10 lakhs positive. Now, if I do addition of all these three, this plus this, 62,500 will go in my cash. So this 62,500 will go into my balance sheet cash.
So actually, dividend is paid, and we should be PBT figure. Sorry, P profit after tax figure does not include that.
See, right now I am not considering all that dividends and all.
No, not
Huh.
dividends. But when they report, we hear on news channel, ये company का fat इतना है.
Right.
So that does not include those costs. That
No,
investment-
dividend comes after PAT.
Not it does not include these costs, operating activity, cash flow from
Wait,
investment.
so this is the I am recording from where I got this cash. So this is different. This is just for record purpose.
Okay, because
So now 62,500 is the surplus that you get.
Yes, after all the business activities and investment activities, 62,500 is what cash I have left with. This cash has gone to my business again. So this cash has gone to my this.
One question.
Yeah.
You invested 5 lakhs in land and factory with the expectation that you want to recover in the next 10 years.
Right.
But here in the same year you recovered that 5.
No,
You
50,000.
removed that- No, you added 5 lakhs right?
He's
in
rem-
cash.
See, I have not removed that.
Yes, you removed that. So if my profit was 5 lakh 62, I
Yeah.
have removed 5 lakhs, right? So right now my profit is 62,500, which means out of my profit I have recovered my land plus
Land
factory
cost, yeah.
cost.
See,
in 1 year it's
right now I am just generating that this is my investment where it has gone.
Again, but next year you will not put this 5 lakhs.
No.
So
तो एक तरह से वो है ना, पैसा मिल गया ना वापस अपना. मैंने इतना डाला था 10 लाख, 5 लाख उसमें
हाँ,
मिल गया.
देखो ये हम क्या डे टू डे, दिस इज अ डे टू डे business that we do.
हाँ,
So if I'm, for example, if I'm right now for this financing activities, I consider this was my previous year ka finance. I have considered right now this is my current year ka thing. If I consider that I have made this plant and machinery before my business started, so here it will be zero. So full cash has gone there.
okay, and that does not.
Let's make the same treatment. I assume this particular capital I have taken at the beginning of the business.
And land plus factory also in the beginning of.
At the beginning of the business. So this year I have not made any investment. Suppose. Then cash flow from operating activities is 5,62,500. I have not made any investments. That is zero. I have not taken any loan this year. That is zero. So my total thing 5,62,500. This has gone into my cash.
Okay, now what if you had a loan on land plus that factory?
Right.
Your initial investment was there.
Right.
वो आपका start में हो गया,
हाँ.
ठीक है. Land plus factory आपका start में हो गया, and in that probably next year you wanted more land, so you took loan. ठीक है. So now if that is 5 lakhs, again, so that cash flow from financial or investment में वो negative आएगा.
Exactly. So if I am taking more loan right now, so that the financing activities means business got cash. So that will come as positive. That will come as positive. Hence my cash will also go up. If suppose this year I took another 5 lakhs. So 5 lakhs से मेरा cash भी बढ़ जाएगा. My cash will increase by 5 lakhs. Because so my financing activities में I will add 5 lakhs. You need 10.
Okay,
You need 10, 100,000, 10,000.
Picture of profit.
हाँ.
Real picture is that PBT.
Yeah.
This is just the carry forward of business में कितना वापस गया.
Exactly. What is the real cash that is coming into your business?
Negative में आना चाहिए.
No, your business got cash now.
But then you
If I am doing investments,
not a 5 lakh loan. 5 lakh loan for land plus factory which you spent on land plus factory.
so here it will come as negative.
Negative in investment.
Right.
ठीक है. अभी आप 5 लाख को नेगेटिव इन्वेस्टमेंट में करोगे तो आपका फिर से ये साल में
Zero.
कैश आ जाएगा 60 to 500.
Okay.
Even though-
I am doing this 5 lakhs right now. Okay.
Why would you? Okay, you add 5 lakhs in financial.
I have taken loan or not?
You have. बराबर.
So I have taken loan,
हाँ.
right? So from finance thing, it will come loan taken from bank 5 lakhs. So that capital business got.
हाँ.
So this 5 lakhs is come into business.
Okay.
Now this 5 lakhs I have invested back into my land and machinery.
Hmm.
So that means from business cash has gone.
Okay, so now it is showing your profit is 562.
Right.
500. The depreciation that will be there, you will be paying by yourself. The loan, interest, whatever is there, that you will be paying by yourself.
Right.
That will reflect in PBT.
That will reflect in
That
this.
is bad again.
Exactly. See, whatever interest I am paying here, interest, right?
अच्छा, तो बेसिकली वो आया और गया, नलिफाई हो गया, आपको अभी जो भी करना है आपकी प्रॉफिट से निकाल के देना
Exactly.
है। एक मिनट पीछे जाइए। मैं मैनेजर है, नहीं कुछ।
Yeah.
हेलो।
हाँ जय, any query?
सिनेरियो होता है।
Smith, you have any query? Vaishali is there. Vaishali, you have any query? हाँ जय, ask me.
ये बेसिकली इम्प्लीकेशन इन्वेस्टर और फाइनेंसिंग एक्टिविटी के अपने बिजनेस पे नेगेटिव या पॉजिटिव वो थोड़ा डिटेलिंग में बताओ ना। फाइनेंसिंग में चलो लिया तो कैश आया बिजनेस,
राइट।
फिर हम लोग कैसे वो कैपिटल एलोकेट करते हैं या इसमें या उसमें।
ओके, सो लेट्स डू दैट।
इन्वेस्टमेंट अभी लैंड ले लिया, लैंड अप्रिशिएट हुआ, उसका तो कुछ बेनिफिट मिलता नहीं है अनलेस कि कुछ भाड़े पे दिया हो, सडनली में दूसरा जगह लिया और ये भाड़े पे दिया हो, तो मेरा पुराना जगह इन्वेस्टमेंट जैसा हो गया। तो ऐसा थोड़ा।
Just a second. Let's look at this. So let's take a real example now of Bajaj Auto. Bajaj Auto. So if I look at the real example of say Bajaj Auto and I'll give you cash flows.
ये लोग रोज अपडेट करते हैं क्या डेटा अपने पास?
See, this data is available quarterly. Every quarter, the balance sheet comes.
They reach out to the companies.
Company has to publish, na? Companies.
तो कहाँ publish करती हो?
NSE website. Company publishes to NSE and from NSE they take it. Okay. I am not sure whether they have given the detailed breakup here. Let's see. No, they have not given. I'll have to find out. Let me check annual report for this company and see. Not present. So let us take live example and see क्या हुआ है करके. Yeah. See, now This is the how they have recorded their operating activities. So all your operating activities, either you can start with PAT or you can start with your profit before tax. Then you will deduct all the expenses or whatever thing they have.
These are all in crores.
Yeah, these are all in crores. All in crores. See, ideally we are not here to create this balance sheet and all. But yeah, still. So working capital and all will come in this thing. We will come to that later. So A, what is the cash from operations that they have? As a CA, I need to go into detail of each and everything, but as a fundamental analyst, normally we don't go into that much detail. What we generally look at, okay, what is the cash from operating activities? 3339. So that means if I look at this two particular year, in March 16, cash from business was 3656. In next year, business cash has come down. I mean operations, which means business has not done good. One analysis. Now, why it has not done good? I need to do the analysis of the full industry. Whether this is same for TVS, this is same for Hero Honda or not. Right? Let's come to investment activities. What did company do? They made a purchase of investments worth 5,000 crores. So this is the net investment company has done in the business. Obviously, there was some investments which they sold. For example, they have bought example new plant and machinery, and they thought that old plant and machinery is not good enough, so they sold that plant. The old machinery they sold and they bought new machinery. So this is how they are recorded. Again, they have certain see. Obviously, these line items will keep on changing from company to company. Like some companies will have investment somewhere XYZ. No worry, no need to worry about that. Just make, just keep in your mind that what is investment activities. It is whatever purchase of investments, or whatever tangible and intangible investments company is doing, we will record it in the investment activity. So if I see company has made net investment of 3600 crores, mostly your investment activities will be negative. Why? Obviously, we want company to grow. We want company to keep on upgrading their fixed assets, their machineries and all. So we want that minimum capex is capital expenditure to be done by the company into business regularly. Just imagine if right now Bajaj Auto, they are not doing any capital expenditure and they are using the old technology which they were using in 1980s, the Bajaj Chetak scooter. Will that suffice in this market? The kind of technology that was there, and right now the technology is way too different. So that's why your this investment activities, we need this investment activities from the company. If company is not doing capex, then we need to understand why. I see, as a growing business, if today I am selling 1,000 units of certain products, I would want to grow, right? Next year I want at least 1,100 units to be sold. Another year 1,200, 1,300, or like company will decide, no, if this year I have sold 1,000, next year I will sell only 800 units. So this capex, generally we as an analyst, we try to see whether company is doing enough investments into business or not. But more investment is also not good, right? If like I know demand for my product is just for 1,000 units, but I make a plant and fixed asset of worth 10,000 units, is it really required? Means I will never have that much demand of my product. So again we have to be very judgmental with what kind of capex is required in the business. This comes with experience. Once someone is tracking this auto sector, They will understand, okay, whether they are making investment of 3,600 crores is good or not. You can't make an analysis of this by in 5 minutes. You need that industry expertise. If there are fundamental analysts in the research brokerage houses who are working for more than 20 years into same industry, means they have been looking at this balance sheet for more than 20 years. After that only they are able to predict whether this 3,600 crores is a good amount or not, whether this business requires more capex. But now is it clear what is investment activities?
This is a loan almost.
No, this is not loan. This is investment activities. This is what is the investment that they have made in the business. Now loans will come in financial activities, where it is.
Now, whether for this investment they have done it from their cash flow, that is profit, or they have taken loan.
Exactly. So this
it
will
can
come.
happen from two sources, right?
Yeah.
For investment, either you take loan,
Exactly.
or either whatever cash you generated in previous year, you put that.
Exactly. So let's look at the financing activities of Bajaj. This is the interest expense, hardly 0.62 crores. Means 62 lakhs is the investments. Interest, very less. Either they don't have any debt or they are just taking working capital kind of thing, which is like here and there. Deferred of sales tax, no need to worry about this because this will depend upon company to company. If we would have been doing this detailed analysis of balance sheet, then it's like really required for us to understand what is deferred tax assets, deferred tax liabilities. But as of now, it's okay if we can skip this, right? Dividend paid, again, the interest that you are paying to bank loan is a financing activities. Interest also, whatever you are paying, or repayment of debt, whatever you are doing, will also come into financing activities. Now this is dividend we pay to our equity holders. Now cash coming from equity holders comes into finance, so dividend whatever we are paying to them will also come into finance, right? So here this year they have not taken any loan or any fresh capital from equity shareholders. So net cash from financing activities is 190 crores. Now if I overall see my business, see my cash from operations 3,300 crores. I have invested 3,600 crores into my business, more than what I have generated. I have generated just 3,300, but I have invested 3,600. And this is cash from investing. Cash from financing is less 190, means I have repaid 190 crores either to my as a dividend or either as an interest. In this case it is dividend. So actually this year my business is actually burning cash. Whatever cash I had, I am not generating new cash. Whatever I had cash, from that I am actually repaying, I am paying something for this particular year. So this year is not good for me because I am actually burning cash of 500 crores. So if you see, my cash before the start of this particular year was 817 crores. And this year I didn't made any profit, or I made profit, but overall business I burnt 500 crores. So from this 817 crores, this amount will get deducted. So whatever is the cash at the end of the year, which is 279 crores, which is 817 crores minus your 539 crores. Whatever is the exchange rate difference, that is fine. The balance of these two is 279 crores. So now I have just 279 crores in my bank or in my cash. Can this business be run for a long term? If every year I am burning cash, I will have to reduce my capital expenditure then, right? यहाँ पे I will have to reduce my expenses. Getting me?
But profit was there, no?
See,
That was the, we
ultimately,
only put in the business that
exactly,
that's why it is net.
exactly. So I need to be cash positive, right? I need to maintain certain cash with me. As a business, I can't go cash negative.
Every year you can't keep on making that.
Exactly. So it would be difficult. Now, suppose I give you a situation in this case. This is the case right now we saw that they are burning cash. Means they are not generating cash as a business. Obviously, they are making profit. Profit is for that particular year only. But you are running this business for lifelong. For that, you need to make investments. Now imagine at this juncture, we find out that Bajaj Auto needs investment of more than 15,000 crores in next 3 years. Means every year they need to put 5,000 crores. Perfect. With their business operations and with the cash in hand, can they do this all alone? They just have 279 crores in their pocket. They just have, okay. They just have 279 crores and next year they have to do 5,000 crores ka investments. From operations, they can get 3,000 crores, this much. But balance 2,000 crores, from where they will get? So now you understand how people, how fundamental analysts think. If they have to run this business, they will have to either reduce these investments.
We cannot find out what in detail these investments are about.
See, as a retail person, we can't, but to a fund house, definitely they can.
वो purchase of investment 0.25024 क्या है?
Yeah, these details will be available to fund houses, not to the retail people. If certain fund house is planning to invest like 200, 300 crores, definitely they will want this detail. Okay, what investments you are buying?
Just as a disclosure.
Not in very detail, but to fund houses, they will disclose even a single pin they are buying as an investment they will do. Because one of my friend, he was earlier with Reliance. Now he is a fund manager in some other company. So what he was in Reliance and earlier he was in Cressy. So what they used to do, they used to visit plant. For example, if Bajaj Auto, they will go and visit the factory of Bajaj Auto. They will open this balance sheet. Okay, so you have done investments worth 5,000 crores. So what all things you have bought? Tell us. So they will tell, okay, we have bought this, we have bought this, we have bought this, we have bought this, kind of.
And fund houses are, how much ever fund houses are there, they are allowed to visit the plant.
They are allowed to visit. See, if a company is investor friendly, see, ultimately, who is between the investor and the company? Fund houses. If company gives access to these fund houses will have more confidence in that company. That's why they will go and sell that company to the investors, right? If management is not investor friendly, Fund houses will directly mark negative on the management side, right? Okay, management, okay, we don't have much information on the day-to-day operations of the business, and management is not giving us that information. Then obviously it will be a question mark to you, right? That okay, this 5,000 crore ka investment, what it is? Are they making really good investments, or they are just buying, if suppose I can buy a car from this, saying that this is my requirement for the business. As a promoter, I can buy a car saying this is my requirement for the business. The other company is genuinely buying plant and machinery for that money. So which one is better? Obviously, the company who is investing in plant and machinery. We know that that car is not that important for a company. Just an example. So that's why you need that clarity. Now is it clear? Perfect. So this is the business. Okay, now that we have seen the balance sheet, the cash flow of this thing, let's look at the income statement and the balance sheet of this company.
So main thing is ki your fact must be good.
Exactly.
Investment in financing is just to see how much money you are putting and how much output you can get.
How much money you are putting in the business and from where you are getting this capital, either from your own sources or from your borrowings. After PAT, there is EPS and all that stuff. We will come to that. The main thing is, have you understood the structure of these three statements? What exactly it is, right? So in this case, let's look at the sales. Let's look at the income statement of Bajaj Auto. So this is the sales of the company. This is nothing but your product, number of quantities sold into average price. This year sales have come down. So obviously, as an analyst, you need to understand why it has come down. Come down, right?
Yeah.
This revenue from operations, other income, other, company to company, it will differ. So no need to worry about this right now. What I am interested is what is the sales of the company. As a Bajaj Auto, what is my main job? To manufacture scooters and sell. But if I am earning something from bank fixed deposits, is that my day-to-day operations? That's why I will not look at other income and all that stuff. I will take into account what is my that revenue, but my major focus will be what is my core business. Okay. Now, in this case, they have not given full bifurcation as we have done. But based on the line items that they have given, we can try and derive whether it is a COGS or it should come below COGS. Cost of raw materials and components consumed. This is COGS, cost of goods sold, right? So from your sales, I will deduct this. Purchase of traded goods. I don't know what detail it is. We need to understand what is this, whether it is what kind of goods they have purchased. What is traded goods? Traded goods, there is nothing called as traded goods. So we need to find out whether this is real COGS or not. So these details we need to have. So if I am a financial analyst, I'll call up company, or whenever the company has their investor presentation, conference calls they have, I will ask, what is this? What kind of cost is this? Then after clarity, I will define whether it is COGS or whether it is below COGS. Changes in inventories, finished goods, work in progress, this is definitely COGS. Excise duty, COGS, because this excise duty is on the manufacturing activity, you pay excise. So this is definitely COGS. Employee benefit expense, this is not COGS. This is like company gives shares to their employees, to their board of directors, or to their CEOs, CFOs, or all the top performance. So all those expenses will come here. So this is definitely not COGS. So for example, right now we'll just consider these line items are my COGS and this is my sales. So from sales, I will deduct my COGS. I will get my gross profit. Because to do business, I need those raw materials. Uska cost will be there. Whatever inventories changes are there, that will be there. My excess duty I need to pay. So when I am comparing company, so first I will compare at gross profit level. So I'll come to know whether companies are properly utilizing their raw materials, their factory cost and everything. I can derive gross profit margin through this. In our case, what is my gross profit margin? Is equal to 9 lakhs divided by this 90%. This is just an example. Don't go on the percentage. This is 90%. Suppose you are analyzing another company and COGS of that company, gross margin. This is gross profit margin. Huh? This is gross profit margin of that company is 75%. So, which company is better as per you? Wherever margin is higher, because यहाँ पे in this case cost of goods sold is very high. We don't know why. So, as a fundamental analyst, you need to figure out why cost of goods sold is very high for this company. What it can't be that different for a two player, right? A 15% margin difference is a big amount. It's a big percentage. Perfect. So I got my gross profit. After that, I will deduct my all these line items, employee benefit expense, my depreciation and amortization, other expenses. I don't know whether this include SGA or what, but let's assume this is SGA. I'll deduct these three. I will arrive at my EBIT. I will arrive at my EBIT. Perfect. Jay?
Yeah.
I will find out EBIT margin. What is EBIT margin in this case? This EBIT and PBIT are one and the same, divided by my sales. Enter. 83%.
So margin at every level is also computed.
Very important. Exactly. EBIT margin. If certain company has lesser margin, say 60% margin, obviously you will then compare why it is less.
Why so much is spent on depreciation or
Exactly.
Since you can come to know, okay, this one has taken loan and this one is from his own.
That will come later. We are still at EBIT level. Now interest expense will come. Finance cost is just this much. In fact, it is benefit. I guess this is benefit. Okay, not a big deal, but it is very small amount. But after that, you will find out what is the finance cost. You will deduct that. You will deduct your interest expense. Then you are left with profit before tax. Again, you will come to margins.
हाँ वो उसमें वो depreciation या small anyway where difference is expense मतलब जहाँ पे खर्चा ज़्यादा कर रहा है.
Right. Again, you will compare this with industry, other peers, and you will try to again understand why there is difference. Then taxes too is paid by all the companies, whatever. So taxes is thick. Then we will come to net profit margin, which is this divided by sales. This is very high number, not practical in real thing, but still. Again, you will compare this. You will compare with historical data as well to see whether company is growing or not. If historically they have been generating, suppose here we got 56%. If historically they have been generating 70-80% net profit margin, and this year they are doing 56%, so that means this year they have not done good. So when you do this fundamental analysis, this is the fundamental analysis that we have done. So you look at companies historical, you look at industry peers, and you look overall comparison. And on that basis, you will come to know whether company is doing good or not. Got it? Another one more important line item here is EBITDA or PBITDA. Yeah. It is nothing but your PBIT plus, here since it's minus sign, I'm doing minus, but I'm adding back my depreciation and amortization cost. I am adding back my depreciation and amortization cost.
Any particular reason to do this?
See, this is not my real expense, right? This is just I am depreciating the life of this particular asset and I am taking this as an expense. But there is no real outgo from my company. Have I paid this 50,000 here? Have I paid this 50,000? I had paid this 5 lakhs before the starting of the year. But this 50,000 I have not paid, right? But just to make accounting proper, I have deducted this life of this particular asset for that 1 year. But there is no actual cash outgrow from my company. Cash is not going from my company. So I am trying to see what is the cash level profit that the company is generating. Selling, marketing and all that is my expenses for that particular year. I am paying for that. I am paying cash for that. So I have taken that into account. So from PBIT, I am adding back my depreciation. So this is my real earning potential of the business. EBITDA. We can also call this as EBITDA. This margin or this line item is very important. It is even more important than PBIT. This line item is important than this line item because we add back non-cash expenses. Again, I will see what is the margin. Because it would happen that some businesses, they are buying their own plant and machinery. Some businesses will rent this plant and machinery. If I am renting it out, I will not buy this will be 0. If this is 0, my depreciation and amortization will be 0.
But then if you're going to rent, there's going to be rent.
There will be rent expense. So obviously I need to compare apple to apple. So if I am doing analysis of two companies, one company is making investments and they are claiming depreciation and amortization. Other company does not making any investments, but they are paying rent on that. So if you then find out the percentage or the returns, it will be different because one company will show rent as expense That is the real expense that they are showing. Other company will not show as expense. Margins will be higher for that company. But this is just an accounting tool. Na? One company is paying rent, the other company, if suppose they are paying the equal amount of rent, whatever is the depreciation and amortization, 50,000, the other company is paying rent that much. Your EBITDA thing will be different, right? Your percentages will different. That's why you need to do that analysis, how the company is structured, how they are like financing their assets, whether they are renting it out, whether they are making their own investments. Then you need to bring apple to apple, and then you need to do comparison. That's fine, no need to go in that much detail.
Once we see, I think, few more balance sheets.
Exactly.
then we-
See, obviously, this will take time, I mean, we have spent almost 2 years in our MBA, and CA spent 5 years in their full life.
Maybe you get a lot of balance sheets too.
Yes, we do it. Yeah. But obviously, we are not required to do that much detailed analysis of this thing. The only thing, like for example, I am not interested in, okay, what is the other operating revenue, and I'll not go into that much details of that. Okay, this is so whatever they have published, I'll assume it is completely right. In sales, I will be interested what is the number of units, what is the average price.
Basically, that will only be the main figure that we will look at.
Exactly.
The
So
sales
I need to
income.
find the drivers for the company, revenue drivers and cost drivers. So revenue drivers is this. Sales is the sales will get revenue drivers. Whether the product's prices are increasing or whether the demand of the product is increasing or not. I'll come to know. Every year I'll get the data from the sales and the revenue drivers will be increasing or decreasing. entire screen. Allow. Now are you able to see?
Manish, I'll come up. मैं lunch लेके आ रहा हूँ. मुझे time लगेगा.
ठीक है, no worries.
ठीक है. तू ऊपर जा, मैं तुझे ऊपर मिलता हूँ.
मुझे at what time? कितने बजे जाऊँ ऊपर?
तू ऊपर चला जा, मेरे को शायद थोड़ा लेट हो इसके लिए.
अच्छा तो मैं लंच कर लेता हूँ ऊपर. हाँ हाँ ओके.
जय तू भी, ठीक है.
हाँ या जय. You had query ना?
Excel open.
Excel.
यहाँ पे शेयर नहीं.
Share. Okay.
लैग है थोड़ा.
Okay. I have shared the screen here. आया? क्या करूँ?
लॉग आउट करके लॉग इन आपने.
नहीं ना वो शेयर सेशन. अच्छा मैं करूँगी.
हाँ.
ओके. नहीं बट उनको भी नहीं दिखेगा ना. ऑनलाइन है उन लोग को. Smith and Vaishali, can you see my screen? Are you able to see my screen? Okay, they can. Okay then. Huh. So, do you guys have any query right now? Any query? Let's wait for them. And yeah, Jay, what query you had? See, huh?
Certain businesses they will have depreciation.
Exactly.
Earnings before interest.
Exactly.
Some will have interest expense.
Exactly.
They may not be having depreciation.
Right.
So actually, gross profit gives a good picture, and then we can
See
whether
exactly. See after your gross profit, you will deduct your selling, marketing, and other expenses. Na? EBITDA is what? It's again the same thing. Na? Sales minus my COGS minus my SMAG. EBITDA.
We
So
can
that's-
add that figure of interest and depreciation and adjust it.
See, I'm not adding. I am doing this analysis before all this because capital structure of a company would be different. Some companies preferring own capital. Some companies preferring like taking loan from the bank. So that's why your interest expense is below. So I am
Right.
doing this analysis before that.
Right.
From this, I need to deduct my interest expense and all that stuff. Now, again, some companies are investing in plant and machinery.
Yeah.
That's why your depreciation is there. Some company will not invest in plant, but they will take it on rent.
Right.
So that's why EBITDA level will capture everything.
Okay. Depreciation is not there in that.
We have added back. We have added back.
Huh. That was only.
Exactly. So we have added back that depreciation amortization cost to EBIT.
Got it.
So if I ever change this particular statement, then how it will come? Gross profit, I'm making it here. Your gross profit will come less your selling, marketing, advertising, and general expenses. So your gross profit is what? This. What is your selling expenses? This. Now what I will get is EBITDA. What is my EBITDA? 9 lakh, and I deduct this expense. This is my EBITDA. Now I will deduct my DNA. DNA is depreciation amortization. What is this? This. Now I will get this EBIT.
Okay, so EBITDA does not have only SMAG. I thought वो लोग depreciation को भी निकालते हैं ना EBITDA के अंदर.
ऐड करते हैं.
हाँ, add करते हैं. Which is in the excluding SMAG.
हाँ, it is excluding the SMAG. I am excluding SMAG. I am including depreciation and amortization, and after reducing my depreciation and amortization, my EBIT is this.
Yes.
See, my EBIT is 8,30,000. Perfect. Fine. Any other query in this? Shall we look at this particular how Bajaj has been doing?
Okay.
So, when you look at the balance sheet or the statements of the company, there are always two things. One is standalone and one is consolidated. So the difference between standalone and consolidated is standalone is only for that particular entity. For example, Bajaj Auto will have various business, various subsidiaries, right? So this standalone business will be only for that Bajaj Auto specific. It will not include its subsidiaries. Whereas consolidated will include all the subsidiaries. Just an example. Suppose Bajaj Auto has created 2 or 3 different subsidiaries. One subsidiary is purchasing subsidiary, Bajaj Auto purchasing subsidiary. So the job of that subsidiary is only to purchase raw materials. Okay. The other subsidiary is selling subsidiary. So it will be Bajaj Auto Selling Limited. So the job of that subsidiary is just to sell products. If we look at standalone, so standalone will be Bajaj Auto purchasing subsidiary. We will have to look at the separate line, separate income statement for that, or separate statements for that, and separate statements for Bajaj Auto Selling Limited. But when you look at consolidated, all the subsidiaries are consolidated in that particular business. So we always prefer looking at consolidated numbers because we are not interested in that particular subsidiary. We are interested as in the full business, right? So now let's look at this. Okay, this is the income statement. Look at the income statement movement of Bajaj Auto. From 7,200 crores, it has increased to 7,400 crores. This is quarterly statement. So I need to see how they have performed. If you see, in June 2019, they had reached at 7,500 crores. From that, they are reducing from 7,565 to 7,499, from 499 to 436, which means that something is wrong in the business. Your sales is coming down. Now I need to identify why my sales is coming down, whether my quantity is reducing or my average price is reducing or both things are reducing. I need to find out what is the factor. Now just in this case, if you know, India is implementing Bharat 6 emission norms. Are you aware of that? Okay. So after March 31st, that means from 1st April 2020, Bharat 4 emission normed vehicle can't be sold, which is called as BS4. So right now companies are manufacturing vehicles which are as per BS4 norms, what do we say, certified. Right now from April, they'll have to manufacture BS6 norms. They have to change it to BS6 norms. What BS6 norms says that, you will have to reduce the sulfur content in fuel. Right now we are using 50 ppm. Ppm is parts per million. They have to reduce it to 10 ppm from this April, which means the vehicle manufacturers, they will have to change the engine of the vehicle.
And will require more R&D costs.
Exactly. So obviously what they have done, they have already manufactured certain quantity of BS4 vehicles. Now after 31st of March, the value of those vehicles will be scrapped.
That is going to be their loss.
Exactly, because a vehicle which is costing 50,000 will be sold in terms of kilos. Okay, what is the kilo? What is the weight of the vehicle? 100 kg. Okay, I'll give you 20 rupees per kg price.
But that will only be for the engine, right?
I'm giving an
For
example. I'm just giving an example right now. So that is why if you see right now, these vehicle manufacturers, they are giving huge discount on BS4 norm vehicle. 20,000, 30,000. Like yesterday only there was in paper, like, we are giving 15,000 discounts on BS4 vehicles. Some Hero Honda dealer he had given.
But then whoever purchases it, for him that is a waste, right?
It's not a waste. So the life of the vehicle is 15 years. So that will be that vehicle. If you buy before 31st of March, it will be valid for 15 years. And normally average life for an Indian is close to 7-8 years.
Because of the road.
Because of the roads or the maintenance and all that stuff. After 7-8 years, I think vehicles are not performing that great because of the maintenance cost. So see, now this is the analysis that we are doing. I don't know the reason. I'm just thinking that this could be one of the reason that from September onwards, they have started giving discounts to the customers. And because of that discount, their sales have come down. This is my assumption. I am right or I am wrong. I need to check balance sheet of the company. But this is how a fundamental analyst will think. Okay, sales have come down. Why sales have come down? Okay, because of government policies, political analysis that we did. Because of the government policies, because of BS6 norms, probably they are now selling BS4 vehicles in discount. And because of that, sales is coming down. This is my assumption. If I can validate that, after 1st of April, when BS4 vehicles will be completely out of production, each and every company will have to manufacture BS6 vehicles. And when there won't be BS4 vehicles in the market, new vehicles, customers will have to buy BS6 vehicles. Automatically, my sales will come up. So I need to figure out whether this is a temporary phenomenon, whether the sales down is because of temporary reason or permanent reason. If I see, no, okay, the GDP is not doing good, people are not buying bikes. If I have that reason, then I need to worry that, okay, right now demand is not good for this particular products. That's why, company might, see lower margins for next 6 months, for 1 year, whatever. Other income, I am fine. We generally don't look at other income to that extent unless we are doing a complete valuation model or, detailed analysis. Look at this PBDIT, profit before depreciation, interest and tax. What EBITDA we calculated here? EBITDA, it is the same.
P.
There is no A.
Okay.
A is for intangibles. So they don't have any intangibles. So that's why they have written as PBDIT. So I need to do this analysis. See, from 1100 crores to they have increased to 1367 crores.
अंकुर सर
नहीं है
नहीं है अभी वो
बाहर है
आएंगे थोड़ी देर में. एक मिनट
वो एक्चुअली सीपीयू का कुछ हाँ आ जाओ
अच्छा fine. So I see that EBITDA is increasing. It has been increasing consistently. If I look at EBITDA margin, it will be PBDIT divided by net sales. So I can clearly say that this has increased, margins have increased. So that means they are doing some cost cutting somewhere. Where are they doing cost cutting? Either they are doing cost cutting at COGS level, or they are doing cost cutting at sales, marketing, advertising, and other expenses, general expenses. So that means company is taking some measures to reduce their expenses, which is good. Now I need to also understand what kind of expenses they are reducing. अगर ऐसा है कि like they are reducing expenses on very important stuff which is like required, then I need, there is a cause of worry, right? Then I will do net profit analysis. 1100 crores was my profit, and it has increased to 1400 in September, and from 1400 it has decreased to 1261. Now I don't know why this has happened. It could be because of my depreciation and amortization. Now they did a huge capex in 2017. In the last cash flow, we saw that they did some 3600 crores ka investments.
Yeah.
So because of that, your depreciation amount will increase. Example. So I need to figure out why the net profit margin has decreased from September to December. I need to figure out that. In general, the December quarter is good for auto companies. Why?
Yeah.
No. Why? Because we have Diwali, we have Navratri and New Year and all those festivals in the last quarter. Exactly. And Christmas and all that stuff. Normally, people buy vehicles in those period. Auspicious day and all that. So I need to do that analysis. So quarterly analysis will also differ. No one would prefer buying a car in monsoon, right? So I will do this quarterly analysis as well. Yearly analysis is important, but this quarterly YOY is also important. Okay, if September 2019 is 1400, then September 2018 was what? I need to figure out that. This is how I will do analysis, right? So this is what I have done for income statement.
Actually,
Yeah.
it reduced from 14 during the festival period, the profit reduced.
Exactly. So that is what I want to understand why it happened.
Depreciation,
Is it depreciation? It is interest, or it is what? Because see, at your EBITDA level, your profit is good. At EBITDA level, your profit is good. यहाँ तक profit is good. इसके बाद से profit has decreased. Now it has decreased either because of your depreciation and amortization. SGN is already gone ऊपर. Either because of your interest expense or because of your taxes. So this is how I need to figure out. This is the income statement, and there are other statements. So see, I can do this analysis yearly, 9 months, whatever I want to see. Let's look at the balance sheet. I will again look at consolidated number. This is yearly. I don't have quarterly. Let's see, let me give quarterly balance sheet. Balance sheet they are giving annually only, I guess. So okay, this is available annually, so we will do annually. So this is the share capital of the company. There is no means they have not taken any further share capital from investors. Reserves and surplus is like, every year whatever profit they have, they keep certain amount, they will put it in the investments, capex and all. Certain amount they will put it in their kitty, which will go into reserves and surplus. Right.
Okay. This
So
is like they invest this amount.
see, obviously,
It's not in
see,
physical assets or
urgency के times, or from here they will pay dividend to the to the shareholders or whatever. So for example, if suppose whatever annual income is yours, you will keep some your day-to-day expenses thing separately. After that, you will see that okay, this amount is something which I'll save it for my later. So that amount you will go and do fixed deposits. So kind of which is called as reserves and surplus. So after your net profit, some certain amount will go back into your business, certain amount will go into dividend payments, certain amount you will put it into reserves and surplus, so that in difficult times or to do some activities you will use this. So every year I have seen there is growth in reserves and surplus, means which is good. That means company is like, every year they are doing investments. After that also they are able to save something, which is good.
4 years में they double.
Yeah, 4 years may they have doubled. So again, if if you are taking Bajaj Auto shares, the prices have also performed like that.
It was around 2100, 2300 in 2000.
Yeah. See, they don't have any loans. They don't have any loans, which is good. But again, see, there is always an optimum utilization of capital. Bank will charge them 8%, 9%, say 10%. But equity, when they're taking from investors, the cost of equity is very high, because no one would invest for 10%. I would want at least 15, 18% from them.
Just one question.
Yes.
Between these two, there is difference. This is coming to this. Okay. Total share. What is added to this?
Total share capital and total reserves and surplus.
Okay, that is added.
So 289.37 plus 21,490 is your shareholders fund.
That is total.
They don't have any borrowings, which is good. Deferred tax liabilities and all we can leave as of now. Current.
Coming back to your point.
Which one?
Before I interrupt.
What was that? Her point?
No, your.
It is doubled through potential. Okay, bye. Are you saying something?
I was saying same thing, long-term borrowing. So
Yeah,
I was thinking on
capital
capital allocation. So obviously they are taking all the capital from equity shareholders. The cost of equity is very high, more than 18% kind of thing. So as a business, I need to understand whether I should take loan or whether I should take equity. We need to have a proper balance of both. You can't take too much sweet food. You can't take too much salty food. You need to have a proper balance.
Why did you say the cost of equity is very high? I mean, for a company to go public is more expensive than to take
No,
loan.
the expectations that shareholders will have. For example, suppose you are investing in any company, right? Anyways, bank is giving you 8% fixed deposits return. So if you are investing in any company, you are taking risk whether company will perform, not perform, economy will perform or not perform. So obviously your expectations from the company will be higher. You will expect at least 15% from that company for taking that additional risk. So as a business owner, the owner needs to give you that return, na? Either to share a price appreciation or through dividends. Through somehow I need to give you that money, right? Otherwise you will not invest in that particular business, right? Perfect. That's why cost of equity is higher.
हो गया तुम लोग का?
थोड़ी देर में. So company does not have any borrowing, which is a good sign. Borrowings they don't have. Trade payables. means like creditors. Creditors means like whatever raw materials they are purchasing on a credit, which is fine. That's a business, right? Business may you get credit, you give credit. उनके debtors थे क्या?
नहीं.
Oh, we are not come to the
No.
asset side, right? Yeah. Yeah, okay. So there are other current liabilities which is fine, short provisions which are fine. ठीक है. Look at the tangible. Now every year they have been investing, but this year they have there is some 200. It is no year it has increased in the okay. Yeah, from year it has reduced. Now I need to understand why this is happening. This is a cause of worry for me. Why they are reducing their tangible assets? What kind of assets they are selling? So if I am doing
It includes raw materials, right?
tangible
Whatever
assets will not include.
manufacture.
नहीं, this will not include. This is capital work in progress नहीं और यहाँ पे आएगा raw materials वगैरह आपके इसमें आएंगे current assets में आएंगे inventories में. So tangible assets means like your plant, machinery, your fixed assets. Now I need to figure out okay, why this is happening. If I get chance to speak to management, I'll definitely ask this question why. What are the things that you are reducing? We need clarity on that. Whether you are shutting down certain plant, हो सकता है.
हाँ, P6 में migrate करने के लिए फिलहाल ये
We don't know, but
required
क्या है पता नहीं. This is yearly data. This data is yearly. So in March 2018 there was no B6 or anything. यहाँ पे there was no B6.
नहीं है. इसमें भी taking as अपना 17 या 18 में वो announcement आया था ना B4 का.
From
Compulsory.
B3 to
B4
B4.
का कुछ आया था और फिर within 3-4 years इसका आया है.
हाँ, so
3 साल में.
obviously we need to do that analysis. Looking at just this data point, it would be difficult. But when we read balance sheet, we will read in detail that we are reducing the investments. We need to find out reason. Non-current investments. So this would be any extra capital that they have. So normally companies generate more cash in case. So they will invest this cash in any company, or they will make fixed deposits in banks, or they will give loans to other companies. So all these are non-current investments. Day-to-day operations, but yes, I need to find out now. This is some 17,500 crores, if I am not wrong. This is in crores, do not mention. So I need to find what is the return that they are getting from this because this is big amount, yeah.
वो is deferred. No, this is non-current investment.
Non-current investment.
So
70.
it is from the shareholders surplus and all. This is
No, this is not. This is like certain investments as a company I am doing. For example, suppose your own thing. You have certain income from your salary or something. You have day-to-day expenses. After that, you will have certain savings. Certain savings you will put in bank fixed deposits, which is like risk free. Certain savings you will either give it to your friend as a loan. Okay, give me certain more returns on that. Certain savings you will put it in mutual funds in equity market. So this reserves and surplus what company had put in here, this they will use only for business purpose. They can pay dividend. They will only use this for business purpose. But this is even for non-business purpose. They could have given this as a loan to any other company.
from that shareholder fund. They can put in their business also, no, to expand their business or anything.
Yes, they can.
Okay.
Yeah. So ideally, so at one point in time, I guess 10 years ago, the people were questioning on Infosys that your non-current investments are so high and you are just generating 4 to 5% return on that.
Non-current is like not really profit generating.
No. These are like long-term investments. Non-current investments means which are due in 12 months,
Okay. अच्छा हाँ.
And
which
that
will
is-
get mature in 12 months, and non-current means long-term, more than 12 months. So their non-current investments were very high and they were generating only 4 to 5% on that. So as an investors, people were questioning management. That was when you are not generating profit on this, then why are you keeping this in your balance sheet? Give this money back to investors. At least as an investor, I'll put it in bank deposit and I will earn more than 5%. No? They're not even giving us bank returns on that. So this was one of the case, which I remember after looking at this. Deferred tax asset is fine. Long-term loans and advances. This is very small. So, okay. No other non-current assets. Current investments. This is some current investments like, they have made some small investments. For example, if something is due in say next 1 month, if I have to pay, I have cash. This cash is in my bank, in current account. Current account does not give me any return. Perfect. Now I have to pay to my payables in 1 month. Now imagine if this 1500 crores lying in my current account, not giving me anything. But if this 1500 crores I invest in government bonds, government bonds are completely risk free. There is no default risk. Even if they give me 1% return, I will earn 15 crores. So that's why there is current investments. Normally companies will not like to keep huge cash in their balances. They will try, if it's a current, if they have to make some current expenses or they have to pay some current things, they will put it in liquid bonds or kind of thing where they can at least earn something. Even 0.5% is like 7 crores, which is a big amount, right? Now this is inventories. So basically, here I can see that company is keeping more inventory. Earlier it was 719 crores, now it is 961 crores. Almost 200 crores higher than compared to last 2 to 3 years. Even compared to last year. Last year it was 740 crores. Now it has increased to 960 crores.
It's like whatever did not sell in December is there.
So basically the inventory is increasing. Inventory is increasing means my capital is being blocked. I need to find valid reason for this. Why inventories are you why are you keeping so high inventories? So it is almost 30% higher, 740 crores and 260 is roughly 200 crores higher. 700 into 30% is somewhat 210 crores.
Yes. Yes.
Right?
35.
So what happens suddenly that you have to increase your inventory by 30%, which is a big thing. Earlier, if you were keeping 100 motorcycle as your inventory, now you are keeping 130. In simple.
This could be because market hit really bad to automobile industry.
Exactly.
During holidays also there was no much consumption.
Exactly.
But we cannot come to that conclusion.
इसमें शायद
Right
न्यूज
away.
आइटम था कि एक्सपोर्ट बैन था कोई कंट्री में वो लोग इंपोर्ट नहीं ले रहे थे इंडिया में
See, that is fine. Obviously, I need to now find this reason.
But Sri Lanka affect करेगा क्या?
Possible, we don't know.
No, sir.
No, I don't know. I mean, that's what I'm telling. Okay, I need to now see why this has happened. Because if I'm keeping more inventory, I need more cash. My working capital will increase. If my working capital is increased, my capital is blocked, my return on investment will come down. In simple.
2-3 कंट्री ने एक साथ किया इजिप्ट या कुछ ऐसा.
Now look at trade receivables. From 1400, it has increased to 2500 crores.
And you trade it from foreign countries and they're going to come.
No, so these are sales on credit. This many people need to pay Bajaj
You want to
Auto.
buy it on EMI or something.
नहीं.
No. Once you buy it on EMI also would come in this, because either you are selling it on cash or you are selling it on EMI. Now how business happens, I'll explain you later. कैसे EMI में also company gets full cash, but this is not, company is not selling to retailers, company is selling to dealers. So to dealers they give 1 month 2 month का credit, right?
So couldn't this be attributed to market not being very responsive and they want to
Yes,
sell
yes.
as much as possible and they're
Obviously,
giving more credit?
obviously, yes. See, what could have happened? There is no sales in the market. That's why dealers are not able to generate enough cash. But they need to, keep on bringing new models in the market. We can't say ना कि okay, new model has launched, but जब तक हमारा ये particular bike नहीं बिकेगा, we will not get the new model. They need to keep that new model as well, right? So now if I go and tell company boss, there is no sales, but I need to keep this new model. So ultimately company will have to give me credit, right? Obviously, if my more money is blocked here, my working capital is blocked, because earlier 1400 or 1500 crore was blocked. Now 2500 crore is blocked. That means more 1000 crore is blocked in my dealer network, right? Cash is fine, almost they are in the range. Now, here I will ask them, this is 293 crores. If you remember that particular year, from 859 crores, they went down to 293 crores because they made investment of 3600 crores. After that, again, see their cash is increasing. Means from all the three cash flows, they are generating positive cash, right? That's why from 293 it went to 778. From 778 it went to 922, which is good.
Means this is year wise this much they have generated कि
See here,
incremental इतना है.
no, this is the position. By year end it was 300 crores.
हाँ.
Next year it went to 770. So increment is difference of both.
बराबर.
Again here increment is difference of these two.
So means they have done 500 crores there, means they have again done some investment, that's why 200.
Could be. That's it. Contingent. This all is fine. This all will depend from company to company. No need to go into that much detail as of now. Once slowly and steadily you start looking at annual report, you will come to know. Otherwise, for each and every line item, one day is not sufficient. This is FOB goods value, means free on board. Value of goods without insurance and all that stuff, which we used to do in cost accounting, not needed right now. Okay, so we looked at balance sheet, we looked at income statement, we need to look at cash flow right now, right? And I guess after that we can take a break. Okay, cash flow they have not given anything only. Yeah, so this was the balance sheet which we saw, cash flow. From operating activities they earned this much. This was the investment they did, and this is what they returned to the shareholders. Dividend paid. So ultimately this was the decrease in cash value. This was the opening balance, and this is the opening balance before this year. This was the cash depleted, and this is the ending balance. This ending balance has come here as opening balance. And what they have done this year, cash from operations is good, investments was not much, but to shareholders they have returned something. This is 1000 crores. We need to see this, what they have done. If I look at the annual report of 2018, let's look at this as well and see.
इसमें वो होगा ना डिविडेंड अनाउंसमेंट.
हाँ, let's see क्या है करके वो पता चलेगा.
इसमें शायद वो हुआ था ना तभी इंट्रोड्यूस 10 lakhs के ऊपर surcharge dividend income.
Let's see क्या होगा. We'll see this. But overall, company has made profit. Even after doing small amount of investments, company has made profit, generated cash. This was my beginning. I added this cash. This was my ending cash. This to balance, this cash flow is not available. Look at this particular year. Cash from operations is 2489. Now, if I look at this particular thing,
ये थोड़ा ये दो सेम साल मार्च 18 मार्च
I guess कुछ तो मिस्टेक होगा इनका. ये दो अमाउंट कुछ तो मिस्टेक होगा. Forget it.
मतलब अपलोड नहीं होगा
ऐसा कुछ होगा.
हुआ
Let's
ही
see.
नहीं होगा
Now
मतलब 2 साल में
look at this. Cash from operations 3300. Then it increased to 4260. Now it has decreased to 2500. Almost 1700 crores less. Means operations are not doing good as of now compared to historicals. That's why I can see company is not doing much investments. Since company is not doing investments, company is returning back this amount to the shareholders. But if business may right now, business is suppose in downturn, you don't require that much cash, you don't require that much investments. So that's why they are returning this cash to shareholders. This is my assumption. Whether this is true or not, I don't know. Perfect. This is still net cash that they got from 760 crores. From 760 crores, this increased to 140, increased by 144, and this is my cash, which we saw in the balance sheet. So this is how you do the full analysis. Now let's look at the annual report. Clear, yeah? Annual report download नहीं हुआ. Annual report is not there.
हम लोग ने देखा था
हाँ.
ना 17.
17 का I want 18 का. Not working. It's 17 is there. So basically, we need to find out why my cash from financing activity is negative.
it is returning all the
They are returning because see they don't have any debt.
okay.
So that means whatever cash is going to equity holders.
So they're trying to pay the dividend while not making the profit.
Possible. I guess yeah, that's it. Yeah.
But I'm the recording initially.
So guys, we will take a break. I will take your queries once we are back from break. Okay. I'll stop this recording. Okay.
I am continuing with same session.
Okay.